Good morning, traders. It's 8 a.m. Chicago time on Friday, the 18th of September, 2020. This is episode number 1840. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Happy Quadwitching Friday. Today is expiration in about a half hour of the U.S. equity futures. Options on futures, options on equities, and single stock futures. That's why it's called Quadwitching. Traditionally, this day has been marked with price pegging, delta hedging, things like that. Essentially more of a pinned and twisted kind of market. People in a higher time frame don't really notice the difference, but from an order flow perspective and from the perspective of continuation on trades and just natural swings, today is not the best day. So for me, this is a day where I just focus on other things. The state of the market is the risk. The allocation this morning is to risk. The Nasdaq leading today up 68.5 points, or 0.62%. Gold is up, trading at 1960. Gold's up $10.20, or 0.52%. The S&P is up 10.25 points, or 0.31%. The bonds are also up 9 ticks. The Russell's up a point and 3 ticks, and the 10-year note is up 2.5 big ticks, 5 small ticks. The Dow is up 15 points. So while there's a slight tilt to risk allocation, really it's a mixed bag. It's a mixed market this morning, and that's no surprise given where we are and what we've done so far. So that's where we stand. By the way, hopefully, I always need a sound check because I think Windows 10 does something weird with the microphone. It changes settings. So if I'm too hot or too soft, let me know. So what are we looking at for today? We had a lot released overnight, mainly in Europe, German PPI, retail sales out of Great Britain, and so on. I'll let you go find a calendar and look those up and see what's going on. What is interesting is the current account Q2 is $170 billion in a deficit versus 150. The prior is 104 billion. Holy crap, that is a lot of money to owe. 170.5 billion dollars in Q2. Just massive. Just really spending. We do get Michigan sentiment today. This is the prelim number. This is the one that is likely to see a reaction at 9 o'clock Central, 10 Eastern. Michigan consumer sentiment. We're looking for 75. We're looking for 75. The prior 74.1. This could be a mover. You want to make sure you remember that this is coming out. Not a tier one release. But the market's often responded to it, and then we get Baker Hughes rig count for oil at 1 p.m. and that wraps up the week. That ends our rollover week, and so that's where we stand. Let's take a look at what was expected yesterday versus what we got. Here's the picture of what was expected yesterday. And in yesterday's video, maybe you want to watch it again. Yesterday's video, I talked about how the auction is quite orderly. The market is following simple auction principles. And the primary expectation, the high confidence play, is the rally back to 41 and potentially all the way through to 51. And that's what you see there. Scenario 1, looking for a rally back to 41, looking for consolidation at 41. 41 is expected to be in play. Expecting it to hold the 1675 low right here. This is the 1675. Oh, why did this color change? Why do my colors change randomly? This here's 1675. It's a composite low volume node, and that's where I was expecting the low of the day to be. and I was looking for it to push, consolidate to 41. That is the high volume node in the region. And then expecting it to push to 51, which is the other side. That is the low volume node on the other side. And I expected the market to just be stuck right in here, right in this box right here. Box it in. And it's a pretty decent sized box, so 1675 to 51 and a quarter for the day, right? And I set up yesterday the narrative and the reasons why this is expected. And now let's look at what actually happened. So here's a 4-tick Renko. We open up in the 2350. We test 1975 initially. Right here, 1975, and we push right up. Here's the 41, push up to 56, which happened quite early. Consolidate, break the IB high, push into 65. Again, that was more extended than expected. I did expect the gap zone to remain open. We left the gap zone open, except that I expected it to be between about 55 to about 73. Who cares what I think, right? Because the market's going to do what it's going to do. Then we get this nice impulse down, pull back to the mid of the session, continuation, and then we finally go neutral on the day. We finished the day neutral normal. With two distributions, one in the upper portion and one in the lower portion. And if you look closely, it seems like we have almost a low volume node at that 41. The market is thoroughly tested below and is testing above, and I'm expecting it to continue higher to close the gap today. Okay. And so that's where we stand. This yesterday's action had 2 million contracts, but the volume itself is not indicative of any conviction or anything like that. Really, the volume is a lot of that is hedging and rolling. The roll is done, and now we can go back to relying on our volume delta and normal order flow uh, uh, structure, and so we're back to normal today. So if we look at yesterday, we really set up quite a few kind of zipper box areas. Yesterday had a pretty decent, I think it had pretty decent opportunities, things to lean against, but overall it was a pretty choppy, typical Thursday before Quadwitching type of a trade, with us focusing mainly on the microcomposite point of control, volume point of control, the composite high volume node, and now we're trading up here. So that's where we stand. We had a neutral day. The day before, we had a neutral extreme down. So what I wrote yesterday in the Head Trader channel on Convergent Trading, I said neutral day after neutral extreme down, gap zone open, bounced on top of the big bounce area discussed earlier, which is the 41. Pretty decent exploration to the composite low volume node at 1675. If you look, you have a low at 1775 right here. So it held that composite low volume node and it rejected it. It tested it. It tested again, missed by a tick, and then we get this strong push up, expecting it to walk up overnight barring news. So expected it to continue to walk up in the overnight session barring any news. So here's the overnight session. As soon as we reopen, we walk up. We continue to push higher, and there was a rotation down. It pulled right back to that 31, which is a stock zone, and then it's now kind of making its way again to the overnight high, and it is likely to walk itself towards this 73 area and recover the prior consolidation area. So let's take a look at the big picture. Where are you? The big picture. So we've done impulse, pullback, continuation, push, take out the last high, took out the last high, pullback, higher low, likely to continue higher. This is likely to pop higher. Not seeing a lot of conviction on the sell side. There was no continuation on this gap down, unless of course something affects it to news, whatever. But the expectation and natural order of things is to turn right back up. We are stuck against the microcomposite point of control in the area. There was the 41 on the composite, but on a shorter time frame, this 60, 75, 61 area, it corresponds with 31.71 in the September contract. And this is the most prominent area in the microcomposite, which was created on the gap up on August 3rd. So that's where that stands. We're on top of it. Where could it go if it starts to move higher? It's likely to test the next high volume node and this confluence area right here at 34.15 or so. 34.15 is the likely next test. And if it clears that, then we are pretty much on our way to 34.96, I believe, 34.96 above. That's the next likely play there. Okay, so that's where we stand. Let's take a look at what's expected for today. So we're going to pull in a full session, 15-minute chart. Let's kill these session prices. Okay, so here it goes. We are at 62. We are pushing against, if I eliminate these overnight sessions, you'll see that there's a bit of a prominent area here. This area is not so big on the composite the composite profile, but it's pretty big on the micro composite profile. The expectation is for a choppy open. We are opening in range out of value. Values down here. Values below us at 46.25 or so. And the expectation is for an open auction. I'm looking for a response to the value area this morning, potentially a push into this 41 again, consolidation, and then I'm looking for the market to float and hold its way, start moving its way to hold towards pushing higher. The overall expectation is that we are likely to close this gap zone, but I do expect a dip today. I expect it to pull back a little bit. I'm seeing, okay prints on the sell side on the tape here that you see on the right. This is time and sales filtered by 50 lots. The secondary scenario, and shoot, I just messed up the first scenario. The secondary scenario, the primary scenario, open auction, responsive, comes back to the value area, potentially testing 41, consolidate, and then move up later in the session. Okay, that's scenario one, and we're looking for this area to be tested and this area to be tested. Okay, the secondary scenario is failure to launch, open auction, pushes higher, takes out the prior high, 65 and a quarter, pushes a little bit towards 73, potentially into 73, but the main impulse is likely to be down and then coming back and building balance here for a longer period towards the 41 area and holding steady so that the markets have a couple of days of rest and balance before they have enough volume to start pushing or collect enough energy to start pushing back up and through to the upper distribution, and the target of which in the upper distribution is 34.05. 34.05, that's the next key area to test upwards. These are the two main scenarios for today. Again, don't expect to be very active today. Convergent members, you'll notice that I'm probably not going to say much this morning. Quad witching is not my game. Statistically speaking, this has been the lowest return day for me. Period. This whole week, actually, rollover week, is a week where I'm generally light in my trading, but today specifically is just not. I find that there's not much continuation, and so I'm putting on a lot of risk for relatively lower reward in the action today and throughout this week. So I'm going to monitor, but if we do get an impulse and a big push, then I'll engage. But otherwise, I'm going to be here just watching to see how it plays out. It is Friday. Good luck today. Hopefully, you'll hit the like button before you leave, and you'll watch your risk to make sure you don't go into the weekend with a hole and an emotional or psychological setback. Just wait for the market to come to you. The biggest challenge you have is the fear of missing out and the need to find a trade. The idea that the market has moved without you a lot of times is more painful to traders than the idea of losing money. Although both, you end up with both in these situations. Just define what you need to see before you trade, and then only trade that. Good luck, and I'll catch you on Monday morning. Take care.